Back to Good Day, Alabama, everyone. 7:21 is the time of Monday, Tuesday. Okay, extension of Bush-era tax cuts will be a major debate on Capitol Hill after the August recess. You'll hear a lot about that. It's the latest piece in the puzzle of treading through a shaky economy out there. Stewart Welch, a financial planner, joins us here today, as he does each Tuesday with Money Tuesday, to talk a little bit about some of those unintended consequences of all the efforts out there to try to deal with the economy, right?
That's right. So it's what we call the butterfly effect. You know, the butterfly flaps its wing here in America, and there's a tornado set off in Japan. It's a metaphor for unintended consequences. Little things, little changes can have really big effects that are not expected.
How so?
Well, I think one of the ones is unemployment. So they've just extended unemployment benefits from what was originally 26 weeks to what is now almost 2 years. And one of the things that happen is when you extend unemployment benefits, you actually extend unemployment because there are an awful lot of people that are out there. There are a lot of people out there that are legitimately trying to find jobs, but there are an awful lot of people out there that are also gaming the system. And so they're actually using the unemployment benefits to just not go back to work, because they have that money coming in.
You also talk a little bit about the lowering of interest rates. Explain here.
So interest rates.
What's the issue there?
So you have this critical thing that happens in the banking industry, and one of the responses that the Federal Reserve has, the federal government has, is they lowered interest rates to essentially zero. And then they loaned the banks $700 billion. And the intention was for the banks to take that money, shore up their financial statements, and then turn around and lend that money out to help kickstart this economy, get it going again. Well, what's happened is that the banks aren't lending money. They still aren't lending money. And they can borrow money at zero. They can turn around and invest money in treasuries or commercial paper, and they can make a spread without having to take any risk at all. So I talked to one friend of mine who owns a business that just got a business loan, and he talked to the banker. It took him forever to get this business loan. He talked to the banker and said from January through August of last year, this is one of the largest banks in the country, zero loans. They didn't make any loans at all. And for this year, so far this year, they've made 18 loans. The banks aren't lending the money. They're just hoarding the cash. And so it's an unintended consequence. It's one of those things where you say we're going to lower interest rates to help kickstart the economy, and it doesn't work. So
there's a story that came out within the last week. Rockefeller Foundation looked at economic insecurity, which is basically wages, which are down across for the most part nationwide, savings, health care expenses, all of those things, and said it's at the highest point. Economic insecurity is at the highest point in the last quarter of a century. Having said all of that, all the things that you're touching into, what's your basic idea for folks with money management going into the following year? What should they be doing right now?
Well, I think what they are doing and what they should be doing may be two different things. What they are doing is everybody is basically still hunkering down. So business owners are unsure of what the environment's going to be. They're unsure what the tax policy is going to be. If you think taxes are going to go up substantially and you're a business owner, you're going to hunker down. You're not going to go out and hire a bunch of people. So again, it's an unintended consequence. And so I think, you just have to be really careful about what you think you're doing and what the result's going to be and what the actual result's going to be.
Stewart Welch, it's always good to see you. Thanks so much for being with us today.